That's what the education, when you get fully educated, can help you to know how to do in the heat of the battle. Ultimately, you know that you are solely responsible for your investment decisions. Big Trends and staff are not responsible for any trades that you choose to make or that you choose not to make. That's your choice. But do also remember that we don't provide any personalized financial, tax, or legal advice. Everybody's situation is different. So everything I lay out here is a framework for what I do and how you can do it as well. But you can consider how you need to modify that accordingly. Do consult your tax advisor before you make any investment that might impact your unique tax situation. Okay, so how do you blast yourself off to true trading mastery? And as we said, it's got to start with the underpinnings of blast off your trading knowledge. What I've found is that the more educated I get, and believe me, I'm a big believer in education. I was very blessed to have a great educational background, graduate from Duke University, and basically went on to get my CFA, which is the Charter Financial Analyst charter holder for more of the fundamental analysis side, and then the CMT, the Charter Market Technician charter holder for the technical analysis side. So I'm a big believer in the more that you know, the more effective you can be. You just have to know how to focus, and then the results tend to follow. Obviously, there's no guarantee on any one trade. It's more about looking at it as a bigger picture plan. Fausto said I'm always right on the Derby. I'm not always right. I do have an edge that has given me some very nice success over time. He's very kind to say that, but the reality is I know going in there's going to be winners, there's going to be losers. You have to know that yourself. And by knowing yourself and what your tendencies are, both what your strengths are and where you've got some what I call blind spots, some areas that you need to improve on, this is how you can really take yourself to the next level and really blast off. And I always think it's interesting too, because a little bit of education can be dangerous. It'd be like having just a little bit of fuel on this launch. You know what happens if you don't have enough surge and enough fuel on that launch of that space shuttle? It's not going to get off the ground and it's going to come back to Earth. It's got to get enough of a thrust and enough behind it to really make it successful. Same thing here. So that's why you can't just know technical indicators and be a successful options trader, especially, but any kind of trader really. You've got to know the other elements. You can own the best stock, and if you get your market timing wrong, you can be sometimes blast even harder if you own the best stock in a market that's turning the wrong direction. You've got to know how to allocate your capital, which ties into then how to have the right kind of trading psychology, because then you're not going to be riding the rails of your emotions of fear and greed, and then you can then feed in the piece of the option strategy. So to me, I think it's important you know these other pieces in conjunction with the options to know then how to best set this up. Now, we're talking psychology, and it gets into, okay, the issue, the trouble areas, the problems that most traders have. I'm just going to quickly review the top 10 problems and see if you can see any commonalities here. See if you can relate to any of these. Do you ever have any issues with pulling the trigger? You do all the work, but you still can't quite pull the trigger. You say, how many of these obstacles have you encountered? Number two, not taking your losses quickly enough. You see a trade's not going right the way that a good pattern should look, and yet you still hope that it's going to turn back around and you'll get out when it gets back to break even, right? That gets you in a lot of trouble. You get in a gain situation and then you let your profits slip away too easily. And then you get in the mode of saying, well, I'm not going to let that happen, so I take a really quick profit. That's a small profit, but then when I get into a losing situation, you take a really large loser. That's not going to be a secret to success. People say you can't go broke taking a profit. You can have trouble if you take really small profits, but then you take big losses. You've got to manage that risk. Do you have trouble with market timing, that you're hurt by adverse market moves? I'm going to show you my favorite market timing system, and it's actually my newest big trend system. It's been working phenomenally well, even through all this chop here in 2015. Do you feel like you got to get your recent loss back, what we call hyper trading or over trading, or I even call it revenge trading? You're trying to get revenge for that last trade that didn't work out so well. That can be problematic as well. Do you find that you're too emotional in your trades? Anybody relating to these, by the way? I'm just curious if we're getting any resonance on any of these. That basically, if you see any numbers that really hit home with you, let me know. But bottom line, or otherwise you've all mastered trading, and I'm just talking to myself, right? You get maybe too confident after a string of winners, then you start to overcommit your capital. That's the danger of overconfidence. You start saying, this is easy, I should have quit my day job a long time ago, right? And then you get whacked, kind of like that old E-Trade commercial where the guy gets a big spike up in his favor. He runs in, tells his boss, "I quit," and then he runs back and it's spiked right back down before he booked the profit, right? So you don't want to be that kind of overconfident. Psychologically drawn down, this is where you've got to manage your internal state. If you're not trading correctly, or you're trying to trade too much and you're getting whipsawed a lot, that's going to mess with your psychology. So you got to manage that. And probably the biggest challenge, I'm glad a lot of you recognize this, by the way, thank you. Never happens, says Tracy. Right, exactly. We're all brilliant analysts and brilliant traders, right? And the rest of the market just needs to catch up to that fact. Well, bottom line is sometimes we've got to have a little bit of a shine the light in the mirror on the areas where we can all improve. Believe me. By the way, let me ask you a quick question. If I asked you, obviously there's a lot of information here. You've got to boil it down to what you can really use, and we'll show you how to do that the Big Trends way here. But, let me ask you a quick question. Just put you on the spot a little bit. If you were saying, and when you look at all that you know about trading, and you say, if you graded yourself on a scale, just even your best friend graded you, because you're not too hard on yourself or not too easy on yourself. You said your best friend graded you as to how well you're trading given all of your skill set. What kind of grade would you give yourself from 0 to 100? Or let's just put it from an A to an F. It's not quite as harsh that way, but let's just go A to F. Would you give yourself an A of how well you're executing all your knowledge, a B, a C, a D, an F? I'm just curious, and again, no hard feelings. Again, we're not trying to put anybody on the spot. An E works as well. So you can see from, because I think everybody can see these responses, that very few people would give themselves an A or an A plus. And frankly, if you give yourself an A plus, I get worried that maybe you're too overconfident and you might be heading for a fall. So sometimes being a B plus, A minus, knowing we've got a little bit of room to improve, you've got some really, you're pretty much operating on a good spot and looking for those next tweaks. If you've got a C or a D or an F, you've got to do an overhaul. And again, if you're an A plus there, Roger, congratulations. But at the same time, be careful that you risk overconfidence when you hit that stage. So basically, make sure that you're staying vigilant, even if you feel like things are going well. But you can see the general flavor is that most people would say they've got a lot of room for improvement. As Faso said, that's why education is your opportunity here today, and not just from me, but you got a lot of great speakers. Pick which one resonates with you of what can take you to the next level and give yourself a better grade going forward in 2016. Now, this is a great quote, and it's from one of my favorite trading books of all time here, and it's one that you should add to your library here, Reminiscences of a Stock Operator. I didn't write it. It was written by Edwin Lefebvre about the famed trader and speculator Jesse Livermore. This is based on his life and times from literally now 100 years ago, a full century ago. And it still applies today because it's still about the emotions. It says, Livermore said, the speculator's deadly enemies are, and there are 4 of them, ignorance, greed, fear, and hope. Now, we always think of fear and greed as kind of our main emotional enemies that we've got to manage, basically not getting too to one side or the other on the fear or greed spectrum. But look at what you're seeking to already help to improve on is not having ignorance, to actually being educated to a deeper way to look at the markets. It will help you see the markets in a richer, clearer, and more effective way over time. But notice the other one on the other end of the spectrum here is hope. This is one that I think is not talked about enough, is that a lot of traders get into that hope mode where they're hoping that something's going to come back once they realize, oh, well, this indicator violated. But this other indicator I wasn't looking at in the first place still looks okay, so I'll hold on and hope that it turns around. And Livermore said all the statute books in the world, all the rule books, and all the exchanges of the earth cannot eliminate these from the human animal. I always think that's a great term there, human animal. Think about that for a second. Let me ask you a question. What do you think separates humans versus the rest of the animal kingdom? Can anybody tell me what you think might be, what is the advantage perhaps that humans have evolutionarily? Opposing thumbs could be one answer. Thanks, Janelle. But thinking, that's right. Decision making. It goes back to our brain in terms of that. We have that same mammalian reptilian brain at a base level. That's the fight or flight response. That basically gets you in a trade, and you think I've got to either sometimes that leads you to risk of doubling down because you think, I'm going to fight, I'm going to double down, I'm going to bet that this thing turns around, or flight where you run out of the trade and sometimes risk running out too early when you get a little too nervous or fearful. But it's the more in-depth evolution of our brains that gives us the ability to reason. Knowing what is right and wrong, and knowledge, cognition, that's right. Arrogance could be another potential risk factor there. But yes, it's that ability to reason, the ability to actually also see past the current moment and to start planning for how do we get ourselves to a better spot going forward. When you look at where you want to be in 2016 by the end of next year, you start thinking ahead of not just the current moment, which is more of a survival instinct that most of the animal kingdom has, the fear of what do I eat today, or do I risk being eaten, right? It's getting past those day-to-day survival instincts and also moving into planning. Okay, so we're going to talk about those planning components, but let's talk about fear for a second. I want to talk psychology, and then we're going to get into charts, don't worry, but basically I'm laying some groundwork here because these elements, most people don't talk about them, but the reality is they're critical to your ultimate success or what's holding you back to get to success as a trader. Let's start with the first big fear, which would be the fear of loss. Let's face it, everybody's got a fear of loss. Nobody wants to lose. But the reality is, as a trader, you have to start to realize that there's a certain small amount of loss that you have to be willing to accept to play the game effectively. And the reality is, when I say, when you say, okay, where is your stop? Because your stop is going to help determine what your risk really is. And in my best Jack Nicholson voice from A Few Good Men, I say, can you handle exiting at the stop? A lot of people say they have a stop, then it hits their stop, and they say, well, I'll wait because it's a little bit too much of a loss. I'll wait until it comes back the other direction, right? And I'm like, can you handle getting out there? You have to be able to say, when it hits my stop, I must exit, okay? There's no excuses. And so that is the first thing. If you can't do that, then you probably need to go into the paper trading platform and build some success there, and then start really small with real money and gradually build yourself up and that confidence up. The second fear of letting a win turn to a loss, is where people end up taking a small gain because they're afraid of that small gain going away. And then they also have a problem a lot of times with letting a small loss go, and they let a small loss turn into a big loss. Because let's face it, most big losses start out as what? Small losses, right? So better to take them when they're small than when they're big. My experience with most of my trend trades is that when you're right, you tend to be right fairly quickly. When you're not right, you also tend to be not right and continue to stay not right. And so the idea is, let the market tell you what's a good trade and what's not a good trade, and then know the difference and know how to get rid of losers quickly and let your winners run. Now, the fear of missing out. This is something that you're starting to see a lot of people starting to kind of clamor about. The market's been on a steady multi-year bull market. A lot of people have missed out, believe it or not. You say, how can people miss out on that? And yet, it's funny to me how, actually the psychology of the market is such that I still see a lot of people that are also doubting the market, that are kind of questioning, can this market keep going? And that's the kind of thing I love to see, because when I see that, it tells me that, we probably have some more legs to the overall bull run. When I look at, say, a long-term chart, like let's look at the Dow for a second. I'm just going to give you a couple of charts here. I know a lot of people love to look at the charts, and so do I. So let's take a peek at that real quick. Here's a long-term chart on the Dow Industrials. And what we have here is a really simple way to identify the big trend breakouts, and we do that through a tool like Larry Williams' %R % range indicator. But I use it in a completely different way. When it goes overbought and it keeps going up, that actually gives me a buy signal on the Dow back here on the monthly chart back at 11,892. That was the last buy signal that's still on that buy signal now that we're at 17,847. But we have pullback points, we call them retests, where we can buy the dip. In fact, the last retest we had was this August sharp drop, which you saw that pull back down briefly under 16,000. And I was on CNBC there in New York along with Fox Business late September, and I was saying down just a little above 16,000. I was saying you have to be willing to buy this market right now, because This is just a retracement. We've seen a couple of these other retracements. We saw a brief one here last October as well, just under 16,000, and boom, we snapped up. Now, yes, 18,000 is acting as a little bit of resistance, but it's encouraging to me we're back above these big trends bands. This purple line here, you can see we've actually closed back above the purple line the last 2 months, and we're back above it. That's the upper big trends band around 17,624 right now. And I believe the markets are still positioned for a rally into year end. We got the good reaction to the jobs data. You say, hold on, the Fed's going to tighten. Guess what? The market's telling you it's already discounted that. We've gone sideways for the last year. Okay, now this is a long-term chart. We can go into intraday charts and all that good stuff too, but the bottom line is that that tells you that we're still for now in a bull market. When I go and I look at the history of this indicator, because you probably noticed when I showed you that first piece there, by the way, that back in 2008, we had the sell down where we had an actual sell signal of 10,800 on the way down to under 6,500 and then stopped out back at 85.01. So it made a couple thousand points on the downside there too. What I love about this system, this is in TradeStation and this is based on the historical performance. You see most of the gains have come in the last few trades, but what I love about this is that this is based on 90 years of data, and of course you can't actually trade the Dow Industrials themselves, but you can now trade the DIA. But this is, if you just trade the Dow Industrials on 100 shares going back over the last 90 years, you would have not only made money on your long trades on this hypothetical history of 90 years, but you would have also made money on your short trades, and that includes going back to 1925. That includes the fact that we've actually had like a few signals, but guess on the short side, but guess what? Most of them have worked, including the one that worked in the 1930s that led to the Great Depression. So called an 80% drop in the Dow between 1930 and 1932. So the reality is that history is on your side here with an indicator like this from the long term. We'll take it now down in the short term on some of our next charts, but I just wanted to show you that is what a lot of people have been fearful about, and yet the market is actually telling you, hey, there's not a reason yet to be fearful. Eventually that trend will change, but until it changes, you need to watch for signs that we're getting too much greed in the system. We're starting to see a little bit of that with the IPO market heating up, but it also cooled off a little bit. You saw IPOs like Square come out recently below their initial pricing and starting to lower that. That tells you that there's still some fear out there. Lastly, fear of being wrong. There's definitely everybody's ego. That's the word that comes out to me is ego. If your ego is heavily involved in your trading, here's a quick way to tell you how much your ego is involved in your trading. That if you look at a trade that you just made, and then you go ahead and you cash it in for a gain, or you go ahead and take the stop, how much during that same trading day do you keep going back and going into the internet or going on your charting software and looking back and saying, was I right? Was I wrong? Was I right? Was I wrong? Do you find yourself doing that a lot? I'm not going to even put anybody on the spot and make you say, yes, I do that all the time, or no, I don't do that at all. But I'm going to say, think about that, because the more you do that, the more you go back and look at that, especially intraday, when you could be focusing on the next opportunity, you're stuck in the past. Your ego is keeping you stuck in the past of trying to prove yourself right. The reality is I have a lot of systems that you don't have to be right even the majority of the time, and you can still make a lot of money trading. As a trend trader, if I lose a buck, make $5, I'm only right 33% of the time, and I'm going to have a very successful system because the size of my win is bigger, much bigger than the size of my loss in a nice trend following system. And a good example of that, just to kind of highlight this idea again, is this is only right 53% of the time on that system I was just showing you based on the Dow longs. But look at how big it's right compared to wrong. It's right 27 times bigger than it's wrong. That size of the average win is 27 times bigger than the average loss you take on that system. That is powerful stuff, and that's a very unusually good ratio. Usually 2 to 1 is good. 27 to 1 is phenomenal. Okay, but be careful about trying to look at too many different things, because it can get you in that game of, well, this indicator's not right anymore, but this other one still looks okay, so I'll hope and hold. That'll keep you away from hope. Now, let's talk about a couple other fear management things. You have to first ask yourself, what's the worst that can happen? One of the things that can get you in trouble is if you trade too large. So if you get your risk too big, even if you've been making money in recent trades, if you're trading too large, it's going to eventually catch up to you. Not only will it stress you out more, if you're having trouble sleeping, that's a sign you're probably trading too large with thinking about your trades overnight. You shouldn't be in that position. You should be trading a diversified group of trades in a relatively small exposure per trade. And so that's something that we teach is how much is too much. To manage that risk, because even some of the best and brightest on Wall Street, some of the biggest success stories, if you will, became some of the biggest failures, like long-term capital management. The guys that won the Nobel Prize for the options pricing model blew up a multi-billion-dollar hedge fund about a year later in the fall of 2008 after winning the Nobel Prize in 2007. So from that perspective, even the best and brightest have made that mistake. Don't fly too close to the sun. Don't get too aggressive in your exposure. Don't also assume that the next trade is going to be like the last trade. A lot of people assume, well, I just took a loss, I think I'll pass on that next trade. Or I took a gain, I'll load up on that next trade. That's that highs and lows. That's riding the roller coaster of emotions. You got to learn that, hey, when I take a small loss, that's just following my system. If it's not doing what it's supposed to do, I kick it out. If I'm on a winning trade, I want to milk at least part of that winning trade for a potentially bigger profit target. That's the key to trend trading success. So some of the strategies you can use: start small and build. The beauty of trading is that whether you're trading $10,000, $10 million or more, it's scalable. You can scale yourself into more and more opportunities over time. And of course, the institutions are still driving the train. They're trading billions and billions of dollars on a fund-by-fund basis. And so the idea is that you can really focus, first of all, on starting small and building. Now, consistent execution should be your goal. The word consistency is the word I'm hearing more and more from most of you when you talk about how where you want to be in the next year. A lot of people are telling me from a goals perspective, their top goal is to be more consistent to end up then having a more successful profile of their trading going forward. So consistency is on a lot of people's minds. And so that's the planning stage. We're going to talk about planning and then building up your size as you prove it to yourself that it can work, and only adding at what I call low risk entry points, which means that they're lower risk than if you buy at the wrong point where you take on too much risk. So we're going to talk about one of my favorite systems to do that. And my favorite high percentage strategy, short-term credit spreads. Before I get into the options piece, though, let me show you an example of my favorite current market timing strategy right here. Okay, now this strategy, I can't go into all the details right now, but I'm basically want to show you a couple things. You can see just in the recent times that, this strategy has really been working well for catching swings in the market. And you can see that there's times where, you're wrong for a little bit, then it pops back up. There's times where it catches it right at the right spot. And you can see there's other times where you're right for a day and then it flips and you go the other direction. So I call this the manic depressive market. You can see this past week was exactly that. We got a buy signal set up on this spot here right off of the close on Monday this past week, as we had a little pullback. We had basically said that we expected the market to flatten out the prior week before Thanksgiving, and you see that's exactly what it did. Went down on that Turkish shooting down the Russian plane and briefly, and then flattened out. But that flattening, we're going to talk about how to profit from a flat market. That was a profitable bearish signal there based on even a neutral market making money for us as a net option strategy. We'll get to that with the credit spread in a minute. Then a quick buy, then it quickly got a rally, and then it said, hold on, now it's saying we're likely to flip the other way to the downside. And then you saw the hard sell-off Wednesday and Thursday on the Fed comments that basically said, yeah, they're going to tighten rates here come their December 16th meeting. That's all but guaranteed in my view. And the market's pretty much assuming that as well. And then you saw the buy signal at Thursday's close right before the monster rally yesterday into the jobs data, 211,000 jobs added, okay? Now, from this perspective, jobs data, 211,000 jobs added, okay? Now, from this perspective, we would look at that and say, okay, how do we profit from this? And first of all, how does this system end up working? Again, this is based on our historical testing where we go back in this case and look back over 20 years. We're going back to the 93 on this chart. And you look at that, and again, Past performance doesn't guarantee future results, but when I see a system like this, those green dots mean you're making new highs in the equity on that system. And so you see that when it's right, it goes up fairly quickly. When it's wrong, it has occasional quick givebacks, which that's going to be a problem for any trading system, but they don't happen that often. And there's a lot of also periods where even if it's not going up, it's not really giving back much. It's just chopping around. Like in this period between 09 and 2011, it was just chopping around. And so when I looked at the historical performance of this system, and I said, look at that. Yes, it makes more money on longs than shorts, which makes money because we've been in a bull market overall, but it still makes money on shorts too, and it's averaging about a 61.6% win rate. That's just assuming if you bought and sold the SPY itself. And I said, how can we take that, along with my team here at Big Trends, Chris, who's in on the webinar, has been a very major part of this with me, and saying, you know what, when we look at this and we say, hey, go back and say, even if you're flat, like this example here, how can you still win when you basically were only right by maybe about 50 cents on the SPY? You think after commissions, wouldn't that cost you? This is where you can win, okay, is the credit spread strategy. This is where we said we actually were able to take our expectation of a 60+% win rate up to over an 80% plus win rate. Right now we're running about 84% win rate for 2015 with this strategy. And this is where you actually are selling option premium. So in this example, you're saying, hey, the stock's at 47 in this example here, okay? And instead of buying a call, which is what most people assume is how you would make money on a bullish play, I'm saying, you know what? I'm going to sell a 45 put, but I'm not just going to ever sell an option naked. I don't recommend doing that. I want to buy a cheaper option, in this case a 40 put, to protect myself. Okay, so this is the option strategy piece of the foundations that we're going to talk more about how you can take it to the next level here with the full foundations and strategies classes. But bottom line is that, you know what, you want to keep it really simple. So we do this even with really short-term options that have about a week or so of life left, because then you can really take advantage of the time erosion in the final days before expiration. So the idea here, if the stock's at 47, is think about the scenarios with this strategy where you win. What your goal is, actually, you're collecting a credit up front. So you're actually pocketing money up front. Kind of like the insurance company. When you pay your insurance premium, for covering your car, your home, or any other valuable, you say, you know what, you don't want something bad to happen to your car or your home. Nothing bad happens. You're glad nothing bad happened, but you still paid out that premium in insurance to the insurance company. Who pocketed that? The insurance company, right, for taking on that risk. And in the vast majority of cases, they're going to be pocketing premiums, and every once in a while, they're going to have to pay out a claim, right? But you know what? You see a lot of big insurance buildings out there, and that industry keeps growing because it's a profitable business overall. Now, the idea here is that, look, if the stock stays at 47, what happens to the 45 put and the 40 put? They go out worthless at expiration. In fact, at 45 or higher, they go out with no value. So you pocket that premium, even if you're wrong on the stock by, in this case, $2 or what, about 4%. So, you say, hey, down to 45, I'm okay. If the stock goes up like I expected, I make money. If stock stays flat, I make money. If the stock goes down a little bit, I make money. Your main goal is to make sure that it doesn't move dramatically against you, okay? So don't be really wrong. You can be a little bit wrong, just don't be really wrong, okay? But here's a case where I can be slightly wrong and still get paid. Okay, so the put credit spread means that we're actually betting that it's a bullish to neutral strategy. We're betting that we can stay flat or move higher or move a little bit either direction, but not really go much against us. And we buy that cheaper put as insurance just to make sure that we can't see what your worst case risk is. If you go to 40 or less, then you're really wrong, and then you're going to lose. If you pocketed 200 in this example, you're going to lose 300. And that's where you have to control that risk if you're really on the wrong side, okay? Now, we're going to go back and look at more examples of this, but bottom line, whatever type of a trader you are, short-term, intermediate term, longer term, you've got to have a plan and you've got to follow it. And it's got to be in writing. So I would ask, out of all the attendees today, how many of you would say that you've got a written trading plan that, don't answer yet, that if you went away for a one-year sabbatical and just trained somebody on your plan, that they would have perfect clarity of what to do through all kinds of market scenarios because your plan is that detailed and has the contingencies necessary to define when to get in, when to get out, how to manage capital, it's when to stop trading if something's not going right, etc. How many would say you've got that kind of clarity in your written trading plan? Okay, not putting any pressure on anybody. How many say you're even close to that? I'm just curious if you're even close. Most of you will not be close. And okay, a couple of you have it. Good for you, Rona. The bottom line is that this is something you need to start working towards. How do you write it? Basically, I'll tell you about that for sure, so you can get some clarity on the next steps here. I'm going to give you 10 questions to start to think about today, but then I'll tell you how to help answer those questions. Now, the first couple, most people would assume you know, okay? And so don't beat yourself up if you're not there. Most people are not there. You've got to work towards this. This is, you want to start positioning yourself now in the final month of this year, like I said, to get ready to make 2016 your best potential year ever in your trading. Now, the bottom line is that entry and exit are the first couple, and that's what most people assume is where all the things you got to figure out are. That's 2 of the 10 I'm talking about here. Okay, so that's just a part of the puzzle. You've got to put on trades, though, where there's relatively lower risk compared to higher reward. And so this is where I talk about my low-risk retest strategy, where you're constantly defining, okay, how do I put on a trade? No, I can manage the risk, and no, I'm going to keep myself in a position where I'm not going to get if I'm going to lose on some trades, but I'm not going to get blasted. That's a big part of it, okay, is that I'm going to really reduce my risk of taking some big hit. There's always risk in trading, and that's why I'm also not going to put too much capital into trades. We'll get to that in another one of these 10 points. There's got to be a clear catalyst for the move, and that's why, most of what I talk about are technicals, but when we talk about catalysts, my number one catalyst is earnings surprises. Okay, earnings matter. Earnings are obviously what stocks are being priced on for their what's basically the discounted the present value of their future earning streams, right? That's going to determine what Wall Street and what investors value a company on. The more they're cranking on earnings, the more that company is going to get bid up because people want a piece of that future earning stream. So earnings matter. Earnings surprises especially matter in my experience, especially as short-term traders, because it's not just what happens on the gap on earnings, it's what happens after that initial catalyst. Let's face it, you and I, whether we're trading, if you're trading $10,000 or if we're trading $10 million, we're still relatively small fish in the bigger pond, bigger ocean of institutional money, right? And so the idea is that the institutions will not be able to run right into that stock that just had good earnings. They're going to gradually build their position. Maybe they knew about it before, but they are going to keep adding to it after that news happens because they want to be in what's working and they want to be out also on the downside. If it's had a bad news item, they're going to keep dumping that thing into the next quarter typically. So basically, you want to get real clear on your system, your time frame, the trading objective, and stop before you get in. So you've got clarity on your entry. Now, the exit side, that system, of course, chart just shows you where we're getting some of the buy and sell signals on the classic big trends, trend following system there. Now, how do you get out? You've got to define your stop point. And as I said, you've got to be able to follow it. You've got to be able to say sayonara if it gets tagged and say a good trend shouldn't have hit that. And so from this perspective, you say, okay, would I still want to be in this trade? Do I still have an edge, a positive edge in this trade? The reality is a lot of people are trading without a positive edge. And that's, as Fausto mentioned at the beginning, that's what we're taking advantage of, is that there's a lot of people out there that are trading and investing that frankly are just buying and hoping. They're basically not trading with a quantifiable edge. That is one of your biggest opportunities when you can put yourself in the top echelon of traders and investors who actually know you've got an edge over time. It does not guarantee you on any one trade, but it says if I take a sound approach over a long series of trades, I should be profitable. It's kind of like, look at the example of Las Vegas where they build these billion-dollar casinos, and yeah, they're having some problems now in Macau and some of these other places because those markets are not growing like they were. But the basic principle of the house is they want you to sit at the table where you're playing on the other side of the table with a negative edge. They know they have a positive edge, and they want you to play as long as possible with just a gradual drawdown that you're experiencing, and then you can justify as entertainment expense. I don't find it entertaining to lose money. I don't know about you, but basically my thought is, I'm not going to sit down at those games where I don't have some kind of a positive edge. Maybe my favorite would probably be playing Hold'em poker, because at least there, if you've got to play a game, I'm not playing just against a house, I'm playing against other players, and I'm looking for weaker players that I can actually profit from. Okay, so and by the way, as I say in poker, if you sit down at the table and you don't see the sucker, you're it. Okay, so the bottom line is that get up, leave that table, and go to an easier game somewhere else. Okay, keep that in mind. It applies to trading too. So bottom line is that you need a clear trailing stop technique too to protect your profits. A lot of traders use a 10 or 20-day average. What I find is that will whipsaw you out of a lot of trades. So I actually trail stops based on these indicator, what I call inflection points. Inflection points are those flush points where a lot of other people are getting panicky about the trend. And so I'm not going to raise the stop every single bar, but I'm only going to raise it when we get one of those new key inflection points. So, a great example of that, we just, for example, let's just look at a stock here real quick, okay? Obviously, these are not recommendations, but basically we come back and trade. Actually, here's Microsoft. Let me show you it on the trend following system for Mr. Softy here real quick. I'm trying to pull that up. One second, bear with me. Let's go over to this one. Remember, we talked about some of those inflection points, of course, too, with like the Dow, as we were looking at that earlier, and saying, okay, when you get this retracement here, a lot of people were bailing on that retracement, but that was actually a great spot to actually get on board during that market pullback there, right? So, and for some reason, it seems to be kind of hanging on me here, so I'm going to have to come back to that a little bit later. Sorry about that. But basically, when we're looking at that, we're saying, okay, let's move it forward here. But when we're looking at that, we're saying, how do we get on when everybody else is kind of getting worried? That's when we often buy those little dips within the uptrend or sell those bounces within the downtrend. Try to come back to that in a minute when it's not hung up there. Basically, when we talk about order entry, that's another important point. A lot of people think they're doing well by just using a limit order and good for the day only. That's a good thing, but you've got to make sure you get filled. If you're not getting filled, you might miss out on a great trade because you're trying to save a few pennies. Exits can be limits or markets. Why? Because the idea is that limits allow me to define my risk and reward clearly on the entry. If I miss a trade, okay, there's another train probably leaving the station, but I've got a clear upside versus downside risk reward. Versus when I need to get out, the damage is that you can not be getting filled and that you can be seeing that loss grow on you or giving up those profits too quickly. So either place a limit at the bid or market if you have to get out. Now, I've talked about capital. You've got to have enough capital to trade successfully. I recommend allotting a fixed percentage into each trade. Typically, with the goal to say we know we need to keep our portfolio risk typically no more than 2% portfolio risk per trade at the worst case. Okay, so that if you think about 2% portfolio risk, and if let's say you're putting in 10% of your capital into a trade, that would mean you need to take a stop if it hits a 20% loss on your option. If that's too tight, then you should trade a smaller amount of your capital per trade because you don't want to take too much of a portfolio hit on any one trade. The cost as it relates to commissions, quote systems, equipment diminishes as your percent of capital goes up. So that's another thing to keep in mind. As I said on percent of capital, I'll use between 5 and 10% per trade in my own accounts. And for a full position, 10% is the absolute maximum. Half position would be 5%. And as I said, keep your portfolio risk down at 2% per trade or less. So that way, if you invest 20% of your portfolio trade, you better have a tighter stop of 10% loss. And the downside of that is that what happens if you get a gap against you and you've overcommitted on a trade? Then you're in big trouble, right? So you want to keep your risk down. So by putting less in, you can give yourself a little more wiggle room and still keep your overall portfolio risk at that 2% or less. Now you got to focus. If you try to do too many things at once, you're going to find that you're in a blur, kind of like that graphic, and basically you don't want to do that because concentration, even a guy like Warren Buffett would tell you that concentration is important to get outperformance over time. His time frame is a little different from yours and mine. He's looking at a 50-year plus time horizon. We're looking at potentially what's going to happen over the next week. And so the idea is that the focus has to be there. I don't like to carry more than a few ideas, and more than 6 would be too many for sure. I'm a lot of times in the 3 to 4 ideas per portfolio, so that way we don't lose focus on trades we need to get in and get out of. Okay, and then trading journal. Out of curiosity, how many of you are keeping a trading journal? That is, and preferably every day. If you're an active trader, you should be doing this at the end of each session. Note your daily observations. Good. A number of you are doing this. This is one of your big guides, and I give you my template on my full position yourself for profits package I'm going to tell you about in a minute. But basically, it's all about how well am I doing in my execution, okay? That's what I'm grading. I'm also looking for flaws in the thought process. If you're thinking, I can't buy that stock, it's too overbought. That's how I switched my trading back in the early 90s when I was thinking overbought was a bad thing, and I actually started realizing that I was missing out on some of the best trends in the market. I also commit to doing what I call a post-mortem every month, a post-trade analysis every month, and also at the end of each quarter to look at what's working, what's not. What did I do right? What did I do wrong? Always learning from your mistakes and learn from your successes so you can look for those winning patterns. That's really what the big trends indicators and systems are all based on, is what I call my success profile, to continue to repeat those. The names are going to change, but the bottom line is that you've got to start to find what works for you the best. For me, there's an interesting few indicators that will help you to find some phenomenal opportunities out there. You just have to know where to look. One of them is actually if something's more than 100% above its 200-day moving average. Believe it or not, that can be incredibly, incredibly powerful to the upside. You think that sounds way overbought, doesn't it? It does, but yet that's like a rocket launching into orbit. After they're in orbit, they tend to keep on coasting. That can be really powerful. That's something I teach. That percent R, percent range that Larry Williams way above 80, I don't consider that overbought reading to be, I use the positive scale. I don't consider that to be a bad thing. Actually, have seen it be very powerfully good in a number of cases. And guess what? Very oversold in the bottom 20% of readings. Most people assume that's getting ready for an upturn, but guess what? If you see where the institutional money flow is going, you'll see that they're dumping those stocks, and dogs tend to have fleas. They tend to keep on scratching and keep on having issues. So we actually trend trade overbought bullish and oversold bearish. It's so counterintuitive, and yet it's been so effective over a long sample of trades. My acceleration bands I developed, that's what helped me launch Big Trends back in 1999. We just had our full 16-year anniversary, so now in our 17th year, helping traders through up, down, and sideways markets, and acceleration bands really helped me to see the big takeoffs as well. The ADX, that's a Wells Wilder indicator, the average directional movement. That's another good one you like to see. Just give me a few you might want to take a look at here. And the efficiency ratio is one that I coded off of some comments from a systems guru, Perry Kaufman, who I thought had a good idea about trend efficiency. I coded it to see something that actually really works well. So these are just a few indicators you can learn from me through the Big Trends classes. But bottom line is that, okay, a couple more here. What's your position review process? You've got to have a routine to close out your day, recap, okay, where my positions are. Did I follow the plan? What do I do next? And keep a log. It's not necessarily sexy, but it's basically mandatory for success that you're tracking your positions regularly and then making comments about, should I still be in this trade? Yes, no, why? And basically go back and recap that then. Preparation, always important. What's the definition of luck? It's when preparation meets opportunity, right? So you've got to have the preparation to actually put the opportunity to be fortunate on your side over time. The bottom line here is that for me, it's about define time to prepare. I like to prepare at the end of the trading day for the next trading day, so you're not reacting to what's happening into the market open. It actually lets me be more proactive instead of being reactive like a lot of other traders. And lastly, what broker will you use? A lot of traders think that commissions are the factor that you're in control of, but guess what? Executions are actually even more important. If you're saving a few dollars on commissions, but then you're not getting filled and you're missing great trades, that actually is going to end up costing you a lot more here. Okay, so make sure you got a broker who gives you fair pricing, but also speedy execution on your orders. And a big part of what we teach at Big Trends, once you've learned these core principles and have a trading plan in place, is then figuring out which strategies and options are going to help you to start cash flowing the markets. As I showed you before, my favorite strategy for high consistency is the credit spread strategy. But then, of course, we've also got trend trading strategies where you can be buying calls or buying puts. But then even better, we've also got strategies where you can actually be doing other what we call debit spreads to go with the credit spreads, where you basically going to be a directional trader but get some growth and some income through the debit spread concept. It's kind of like the cover call here on steroids. Okay, you don't have you get a lot more bang for your buck by not buying the stock, but buying an in-the-money option instead. So we teach you all these things, and I know I want to show you a little bit about how you can do that. Come back and answer some questions here as well. So let me show you the special page that we've set up for you here today, and it's at bigtrends.com/position for profits. Okay, just spelled out as those three words spelled together. Chris is posting it for me there. And what this is actually, I recorded 3 different sets of classes, okay? And they're 13 parts. Now, why are they not 10? Why are they 13? Because in each of these classes, I not only gave you the foundations, like how to build your trading plan out here, okay? So this is a big part of foundations is saying build your trading plan like I've talked about here today, define your goals, and then know what you want to accomplish and how you're going to accomplish it, okay? But within each of those classes, which were 10-part classes, I also wove in several of my key indicators and strategies for trading the markets, okay? So within each of those, you end up getting almost like a fourth, it's like 10 part series plus then a fourth bonus nine indicator series where you're learning all my different tools and techniques. The Ultimate Strategies, of course, goes through all the different option strategies that I like to use, and you really get a fast break, if you will, of learning options that might take you years to master with just this basically 13-part course. Now, each of these classes, by the way, is at least an hour. Some of them go a little bit over an hour. So from that perspective, these are why I give them to you lifetime access as part of this this special package here. And then trade psychology, trade management. You know, knowing how to manage your trade is more than half the battle. You know, you got to put a trade on at the right level, but you've also got to manage it. And so that's another 13-part series. So that's 39 sessions. It actually ends up being over 50 hours of content, all from me. Includes the slides, the templates, the study materials from every class. And you can actually see the outline down below here, where it walks you through in each of these tabs what you're going to learn, not just in building your trading plan, but how I use the Williams %R indicator the big trends way, how I developed this acceleration bands and how you can use that, how you can use the directional movement lines, these technical analysis bonus classes that are a part of that as well. And so it builds up your skills over time. You can click on each of these tabs. The strategies course, you know, it basically teaches you about the Greeks, the options pricing model, all the various spread strategies, debit and credit spreads, and then other technical indicators like, of course, how to use those moving averages I was talking about. The Donchian channel system is the one I showed you earlier on the spider, and how Donchian channel system is the one I showed you earlier on the spider, and how effective that's been for more than 80% win rate in our credit spread program for our index options timer. And then the commodity channel index, the CCI. So those are all woven in with things like how to use iron condors, straddles, strangles, ratios, butterflies. You know, if that's foreign language to you, guess what? That's why you need this material, because you need to know all those option tools at your disposal to take advantage of all types of markets. That's what I love about options, is that you can really customize an any option strategy to any kind of market view. And then the psychology piece, really building your winning trader's mindset, really mastering your own internal trading demons and psychology, and then taking yourself to the next level, knowing how to manage those emotions. Also, the money management piece, what we call position sizing and position scaling. And then other indicators are woven in there like stochastics and RSI, that efficiency concept I just mentioned. And then market timing is critical. You got to know tools like the put-call ratio, how to use the VIX, and more. So there's so much here. Now, one thing I got to show you, though, is when you go to this page, it says, I'm giving it all to you here. Normally, this would be like a $1,500 value. Each one of these 3 classes usually sells for $495. Okay, so add them up, you're $1,485. Guess what you're getting it for today? $195 all in. One-time investment, no further billings on this offer. You've locked in lifetime access for just $195. But what you're going to notice is you've got to use this coupon code Cyber Monday. I think it should be all one word, Cyber Monday. So let me just show you that real quick. When you hit the Add to Cart button, you see it gives you all 3. That's 39 different sessions access. We also, by the way, give you ongoing email support. So if you've got questions from the material, drop us an email. My research team and I gets those emails, and you'll basically get it get your questions answered on any of that material. Now you'll notice it's $3.95 here, but when you type in the coupon code I just mentioned, which is Cyber Monday, and hit apply, just Cyber Monday, you see what happens. It takes an immediate $200 discount. That's the only one that can be used here. And this was something that, of course, I'm stretching out basically through this coming Monday. So make sure that you lock it in before then, to lock in this lowest ever pricing before the price goes back up. $195 for 50 hours of content. I don't know how to make it any more of a Cyber Monday slam dunk special than that. But basically, I wanted to, show you how to take advantage of this. So you get all 39 sessions, Steve. That's right. You use that coupon code Cyber Monday, and it knocks off the price. It's already too low at $3.95. It's really too low at $1.95. That's why I'm only going to have that out there through Monday. This is unlimited watching. You can watch as many times as you want. All I ask is that you're using it for you and your family's benefit. We do track IPs and all that stuff, so don't be sharing that access with anybody on the outside. Bottom line is that 13, 13, and 13 equals 39 sessions, more than 50 hours of content, plus all the unlimited support on any questions you have from the material. We give you a dedicated email to send us any questions you have from that. Okay, now let me go back and make sure I didn't also miss any other questions here before I hand it back over to Fausto in a minute. Basically, Chris is giving you all the details there. You can also, see the tabs of the course outlines down there just underneath where each of those tabs is listed to see all the things you're going to learn about how to build out your trading plan to reach your goals over time, and then the right option strategies, and know you've got the right psychology to manage your internal state. Because let's face it, trading is a very much of an internal game. It seems sometimes like it's you against the rest of the world out there, doesn't it? And yet we give you the support, the resources, and the backing of what's worked for me over 25 plus years of trading, and what I'm confident that as you implement this can really take your trading to the next level through this Position Yourself for Profits course with the unlimited lifetime high definition quality video access. Okay, so it looks like Chris helped answer those questions. I want to help keep this on time. You've got a lot of other great speakers here today, so make sure to stay with them throughout the day. You're going to love all the remaining hours of content, including Fausto's upcoming talk next. So I'm going to hand it back over to Fausto and his team and say thank you, everybody. Wish you a very happy holidays. You're going to want to lock this down through this Cyber Monday special coupon code. Just remember that. You got to type in Cyber Monday, all caps, when you do that, and then you'll get the best ever pricing I've ever had, $195 for basically a $1,500 course, and even there, I think that's for 39 sessions, 50 hours of content, something that you just can't beat. Basically condensing my 25 years of knowledge into a high-powered course to really move you towards your 2016 being your potentially best trading year ever. So I want to thank Foster and his team for setting up the event today, hand it back over to them, and wish you all great trading and a happy holidays. Back to you, Fausto.
Price, thank you so much for having that, and I wish you and your family and everyone a happy and healthy holiday and a happy new year, everyone, and thanks, Price. Price did a fabulous job. Listen, there's a reason why, we have Price here. I mean, listen, for someone that's been educating, and you're talking probably between all of us, over 100 years of education going on right now, and Price obviously did a phenomenal job. And listen, it's a great deal. What's the worst thing that could happen? You learn something? I tell everyone, so definitely enjoy it. And in the meantime, I'm going to be coming in. I'm going to be starting my presentation in about 2 minutes. So in the meantime, I want to give you guys a quick little break to get a little refresh up and put your orders in, and then I'll be right back. All right, ladies and gentlemen. So enjoy the rest of your presentation. We're right back.